This will be the most important video that you will ever watch in your entire trading career, or one of the most important video that will kickstart your trading career in a very, very profitable and consistent gaining environment or direction. So, what I want to share with you is a strategy that will give you that consistency for not only for a single trade, but for the rest of or most of the trades that you will make or that you will participate in. This strategy, I don't have a name for it, but what we know for sure that you will gain out of this strategy is mind blowing, because what we are looking at in front of us here is, first of all, let's take an example. We are looking at this 7 minute chart. This 7 minute chart tells us a lot of things. Tells us where the volume is in the market, tells us where the volatility is in the market, tells us where liquidity is and where momentum is in the market at the same time. And all that together, it paints a picture of area of interest or area of enough interest. Okay, so with that in mind, I want to point out one thing or two things about this chart. This chart, first of all, I mean, additional two things, not just two things, but additional two things. The first one is being this orange candle, which is our entrance for a put option, and this white candle being our entrance for a call option. Okay, so with that in mind, I just wanna put this out to you. The left hand side of this chart of the screen is a smooth side of the strategy that we are going to be using, but the right hand side is a partial strategy which is not smooth but the same concept. Okay, same concept being, we see an orange candle, we know that is our entry for a put option. We enter a put option on the next candle. Okay, we wait until when the candle changes goes to a neutral color, which is either just green or just red. Just green or just red means um, it's still on a certain direction. Green means it's still bullish, but not enough pressure, momentum, volume, liquidity, or momentum in the market. Whereas red means there is selling pressure. We're bearish, but again, not enough volume, volatility, liquidity, momentum, and pressure. So it's an area of no interest in general. But on the other hand, white means we are at that area of interest. Okay, the area of profit, where if we enter after the white, we have a chance to get a piece of pie, and that piece of pie is what we want. So we set our stop loss before below the white or above the red. I mean above the orange, sorry, for put options, and then we ride the next candles. Okay, and that applies. That is more visible on the left hand side chart. We have the white entry signal, we enter the next, and then we proceed. Okay, anyways, what I want to show with you in general, if you haven't quit yet, stick around. What I want to show you today is um, how we are going to build this chart together, how you're going to use this chart, and which area of this chart you should trade and which area you should not, and how you can enter and exit your trades using this chart alone. Because this chart is a one in many, many charts that you will never find, but also a one in many chart that does not contain a lot of indicators, but have everything that you will need. Not to forget, do not I would not like you to miss the power, what I call the power of the first candle. The power of the first candle, we're going to talk about that in a second. Actually, not just the power of the first candle, but the power of the first opening candle of the trading day, and specifically the closing price of the first candle of the trading day. Okay, and you might have noticed we have this white line here. This white line indicate that closing price of the first candle, and we're going to see how that impacts the day or the rest of the day. If you haven't noticed yet, I'm going to show you a quick hack here, which you're going to follow. And I mean, if you follow, you might not lose a single cent. I'm going to show you in a second here. Without wasting time, let's change this from dual chart to a single chart. And then now that we're looking at a single chart, I'm gonna go ahead. Let's start building this chart together so that you can have a copy of the same chart that I'm looking at. All remember, all this is free. You're not paying for this in any way. All I ask is like, subscribe, and share the video so that we are both benefiting from from the same thing. So what I have here is I'm going to go ahead and remove this and transform the chart into a traditional candlestick. I mean, a traditional chart. We're looking at the previous day, or we could look at this day. It doesn't really matter. I'm going to go ahead and delete everything, all the drawings and all the indicators. And that brings us um, to the regular chart. Okay. The first thing that we want to do is um, change your chart. We can do this later. Actually, let's start with indicators first, and then we can change our chart to indicate. I can actually later. The first indicator that we're going to be grabbing is the RSI bars. Okay, let's go to the trading view section, which is indicator section of the trading view, which is right up here. Okay, where I'm pointing at, and let's look for RSI bars. Um, and just there type RSI. We are looking by RSI. We're looking for RSI by G Laz or Glaz. Okay, we're looking for this RSI by Glaz. It should show up somewhere if you're looking at down here under community. It should be RSI by RSI candle. Okay, RSI candles by Glaz. So you're gonna go ahead and click on that and apply that to your chart. Okay, immediately after applying it, you see that there's red and at least there is that orange. Okay, and there's some super yellow, super green over there. So let's go ahead and change the settings of this indicator for a moment. We're going to reverse this. Actually, we're not going to use this the regular way people use RSI. We're going to reverse this, and stick around. I will show you how. Click on that gear icon, go to settings. First thing we want to do is click on this green color, change that to yellow. Okay, next thing is click on that yellow. Okay, click on that yellow. Not yellow, bloody red, I would call it. Click on that red and change that to orange. Okay, once we have changed that to orange, it's clearly visible, and our yellow should be clearly visible as well, which is right over there. Okay, the next thing in that same settings, the next thing we want to do is go to inputs, move from style, go to inputs. Under inputs, change the length from 14 to 2. Okay, remember at 14 here it's telling you the oversold volume, oversold area and overbought area. We don't want that. We just want areas of value where the actual selling is happening. So change this to 2. Once you change that to 2, you will see the areas where the actual selling is happening or the actual buying is happening, not where it's being oversold. We want to avoid that we want to avoid the area where it's oversold, and we want to avoid the area where it's overbought. And changing that values allow us to avoid those errors. Now we only have areas where we are actively selling, meaning these areas we have enough we have enough volume, we have enough volatility, we have enough liquidity, and enough momentum in the market. But where the candles are neutral, green meaning green and red, it means area of no interest. It's an accumulation level, and a perfect example of that is this level right here. Okay, this is a perfect example of that. This is an area of no interest. The candles are green, the candles are red. We don't want that. We want where the candles are yellow or orange. Those are the candles we're going to trade. All right, let's move to the next indicator. The next indicator that we want to grab is, you can press the forward slash on your keyboard if you want to. So just take a shortcut to the indicator section. The next candle we want to look at is the wave trend. It's called a wave trend. Okay. We look for wave trend is one word. Not wait. Oh, only if I can type wave trend. Okay. Wave trend by this lone. No, no, not by Lone Star. Yeah, by Lone Star. Wave trend by Lone Star. And it's also the same thing under the community. You're going to click on that, or Lazy Bear. Okay. Click on that, and that will apply to your chart. You will notice that that is actually a mini. That's a sub chart. I normally like to hide this sub chart by double clicking on my screen, and if you double click, yeah, you will see that but before we do, let's go ahead and change some of the settings here. I like I like the signal for my uptrend to be painted white. So click on the gear icon here, go to style. Under style, start from the bottom, uncheck every boxes. Okay, well, actually no, uncheck the first two boxes, and then the where it says what is this color, not aqua or whatever it is, let's call it pale white. Where there's that pale white, change that pale white to actual white. But actually that is the downtrend. Let's change that downtrend to something else. Let's change that downtrend to uh, let's call it that aqua. Okay, I believe that's aqua. If I am not correct, excuse my color you know color knowledge or knowledge of color. Where is yellow, let's change that to white. That's what I was saying earlier. Okay, let's change that to white, and then click OK. Now you will see that where you have that white is corresponding to the oversold area. Okay, but also at the same time, that aquaman over there, that aqua is corresponding to the overbought area. But we want the overbought area to be within the top two lines, horizontal line. For example, this one right here. Okay, it's above, it's within that level. And the overbought, oversold right here, you get that over there. So I can do without the subchart here, but you can keep this subchart because it might allow you to identify areas of values. There is one mathematical words that we'll use. In average, take a look. In average, these lines, the green and red, might be on one side. In the middle here, we have the zero line. The green and red here might be on the negative side, meaning it's more bearish, or might be on the more positive side, meaning it's more bullish. Let's take an example of that. Okay, an example of that. Okay, right here. Let's say right here. On this day, right from here, the day was more bullish. Okay, we spent time above the line, above the zero line, than we did below the zero line. So anyways, let's get to the last indicator, and that is maybe not the last actually. The last indicator, from what I can tell you, is what we will be calling the simple moving average. But before we get the simple moving average, let's go ahead and just get the moving average, which is what we will call the triangular moving average. Go ahead and see the MA, um, moving average. Okay, look for, once you type moving average, look for this Renko moving average, RMI alert, and all that by just uncle, and then apply that to your chart. Once you have applied that to your chart, go ahead and click the gear icon under Renko MA RMI, and let's change some settings. This is what I was talking about. Uncheck the boxes. Okay, uncheck almost every boxes until when you get to this purple. When you get to this purple, change that color to white and just increase the intensity so that it's pure white. Okay, after that the last thing you want to change is under input. Go to input, change the moving average type to TMA, which is triangular moving average. If you don't know what triangular moving average is, it's a type of a moving average that smooths out signal, just like the Heikenhashi candles would do. Heikenhashi candles smoothes out signals, but also the triangular moving average, or the TMA, smooths out the signals. Okay, so with all that in place, we're gonna go ahead and add the very last thing, and that's going to be the simple moving average, 50 period moving average. Okay, actually, it wouldn't matter. but I like to use a simple moving average. So I'm going to add a 50 period simple moving average. Okay, go back to the indicator section. I'm just pressing the forward slash if you're wondering. So there, type moving, actually type simple moving average. I wish I could have that super speed, which is this. I haven't actually favored it, but let's actually go ahead and do that. I will apply that. Oops, simple moving average. Not that one. I guarantee you. Not that one. We kind of messed up there. All right. Give me a moment here. That's the one we want, the blue one over there. Okay, that was a failed attempt. Let's redo this again. Let's type there moving average. Under technical, we want to go under technicals actually. Under technicals, we want to look for moving average simple. Right. This is what we're looking for. Moving average simple. Favor that. Once you favor that, go ahead and apply it to the chart. It should be a single line right there. Okay. This moving average simple, we're gonna, it's a 9 period moving average, but we're gonna change that from 9 to 20. No, not to 20, to 50. Okay, we change that from that to 50. Now, this is how the now that setup is concerned. Is complete. As far as that setup is concerned, we are complete with that. What we're done with that indicator things. If you're using the free version of the TradingView moving average, TradingView in the platform, you just need to focus on this RSI bar along with the Renko. Actually, maybe not even the Renko. The Renko will not do that much for you. But yeah, maybe along with the Renko. And then you can sprinkle that on top of it. Okay. Which is the Aikanashi. You click at the top of your screen, go to Aikanashi, apply that to your chart. Once you've applied that to your chart, let's take a look. First of all, I'm going to combine things here because we're running out of time. But if you take a look here, you will see that we have this white line. This white line indicates the closing price on the first candle of the day. The first candle is right here. The closing price was right there. You will see that this line actually a lot of time acts as support level or resistance level, depending on what side we are in, on what side, what blue side we are in. The blue side, the blue line here means we are at the 50 period moving average. If we're above that, we buy calls. If we're below that, we buy puts. Okay. But also depends on the previous trading, a previous higher high. We do see that the higher high on the previous day was right around here, meaning that um, if we are to trend, we will not be far from that. Okay. So we are right around the previous day higher high or the higher high resistance swing high. So with that in mind, that makes this to be either a reversal. A reversal point or um, something like that. So with that in mind, let's take a look here. How would we make a trade? We would make a trade in this way. We make a trade if a candle, first of all, okay, the high Kanashi candle, we get a sell signal, but that sell signal, if it has no wick at the top, we take a trade right away. And then it's followed by a candle that has no wick at the top, we take a trade. If we get a neutral signal, a neutral candle, that just means there's not enough volume or pressure, but we're still bearish. Okay, we stay in the trade, and then we start getting those chops. When we get a doji candle, we exit the trade. Okay, same thing here. We get, let me hide that subset. Sub chart. I just double click the screen, by the way, and then here we get the long option of the call or the call option. We see the white color here. We enter the trade right here. We buy right after that. After crossing the TMA, we ride. We get our first doji. We exit before even we get that sell signal. Same thing here. We get the sell signal over there. We are at, of course, we are at accumulation level here. We are at the, we are at the distribution level, not accumulation. Accumulation is where I have cycled here in orange, and then that gives us the uptrend. But yeah, just like, share, subscribe,